Hello and welcome to another update video about Ethereum. We want to focus on the latest price action. Price climbed a little higher today, not too much more, but we actually stretched today all the way to 1976. Small triple top up here. Yeah, pretty obvious one. Small triple top. And yeah, what can I say? I mean, the top could be in, right? The top could be in. You really always only know afterwards, but this is obviously the region where we expect the top. Between, what did I say, 1960, 1980 originally. I think it could stretch all the way to 2020 in this scenario. If it goes way above that, yeah, substantially above that, then I think we're looking at something more bullish, yeah, that we are already in the third wave. I talked about that earlier today, that scenario is of course valid. It's a bit of a crazy thought. I think nobody expects that. Sometimes this stuff then happens, okay? But this is, we are in this in this overall bullish scenario. So for me at the moment, the trend is up, okay? And our relevant support area in case of a deeper pullback is, I need to adjust it now slightly or not. No, not really. The relevant support level, the 78.6 retracement of that move to the upside, which started on Thursday, the 15th of June, that's at $1,700. So as long as we stay generally above that level, the overall uptrend in this overall scenario is defendable and is expected. Yeah, further upside. Now, of course, on the micro level, there are different scenarios. I think we are in an ideal world here, very close now to the top, very close. Okay, I already took some profits. If it goes a bit higher, I'm going to take some more, but I think it's very close to the top. And we now just need to wait for a signal that's coming down. Obviously, we see a little bit of a red candle now, but that's not enough to confirm that. But yeah, if it breaks substantially above that 2020 level, I think we are already in the third wave. I talked about that before, because if we have an assumption that we are in an overall third wave here, then we have to be ready for these crazy rallies. Yeah, I shared it in my first video today. There are basically three scenarios, and I can tell you which one is the most likely one for me, and the second most likely, and the third most likely. So in the first scenario, which is my primary expectation, we have here a wave 1, a wave 2, a wave 3. This was the wave 4, this low on the 28th of June. And we've completed everything that we wanted to see. So the primary scenario has worked out actually flawlessly, if you think about it. We talked on the 15th of June about, okay, the low could be in. We had a first 5-wave move up. We said, okay, this looks like either the first wave of a diagonal or an impulse. Wave 2 down. Yeah, no, worked out. Reached the target up here. It was the 1.618 extension of the wave 1, if you remember that. We held our support area. People who used it would now be in profit. We reached the target here. Perfect. I mean, perfect. Yeah. Now we are at the next decision point. Primary expectation would now be, of course, to follow that structure and to move down in an ABC into this support area. Now, bear in mind, when an analyst is correct, and we've been correct basically here since the 15th of June, I think on every turn in this structure. Yeah, I mean, you can never forecast every little microwave, yeah, nano wave. But nevertheless, when someone's correct a lot of the time, then at some point, and that's just the typical, it's just the rule, like mean reversion, you will get to the point where you're not right, okay? That's just normal. So we need to be aware of the levels that will trigger a different scenario. So this would be the ideal scenario. Textbook, come down now in 3 waves and move higher in 5, That's my primary scenario. Now in the alternative, which is the second most likely one, I think we have a chance to do this. 1, 2, 3, 4, 5. We already had here 5 waves. I don't like that idea because it's not clear. But then the wave 1 would have been here. The wave 2 was here already on the 28th of June. And now we rally in the third wave and extend completely into the $2,400, $2,500 level range, yeah, and higher. That would be a direct breakout scenario. For me, the second most likely scenario, purely due to the fact that we have potential impulsive characteristics here, yeah, and therefore at the moment, a scenario in which we break down completely is the least likely one. Yeah, it is also, of course, not unlikely. You can't say that, but it is. We talk here about the small time frame, but the third most likely one would be this one, where, hey, we had just, I don't know, a WXY structure or something, which would be a correction, even though with 5 waves up, this is getting less likely. And then we are breaking down, okay? This is the third most likely one. Actually, from all of these, when I weigh them against each other, this is the least likely one. So it gives you hopefully a good idea about, what my view is. And the relevant levels, this is my, I wouldn't say feeling, but this is my impression, okay? From probability, sometimes the less likely one works out, okay? So it's just what it is. It's all probabilities. But what is objective are the levels. So we have key resistance at 2020. If we get a substantial move above that, then the direct breakout scenario is most likely going to play out. And if we break below 1700, it is the breakdown scenario that is going to work out. So be aware of these objective levels until we see a sign that the primary expectation is not working out. I'm going to follow that scenario that I showed you. So yeah, hopefully that helped you. On the micro level, there is not much more I can tell you really. The idea is here that we're moving up in this ABC structure. What we could do is try to look again at the Fibonacci extensions here for this C wave, because I'm looking at this entire move as a diagonal. So the wave 5 is a 3-wave move. So yeah, A wave up, B wave down. What are the Fibonacci extensions here? Yeah, that's also why I said, this is sort of the target range. It reacted to the 61.8 Fib extension. This is theoretically the first common target for a C wave. So it could come down from here, but it's obviously too early to say that. More likely is the 1-to-1 ratio. We talk here about 2020. So let's see if we get there. Yeah, let's see if we get to that level. But at the moment, expectation would be to go a little higher. Unless I now see a break below 1895, then I would assume we are in the wave 2. Yeah, so hopefully that is clear. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.